comparison to what they're doing. So I prefer to actually talk about their talents.
Yeah, absolutely. Your Majesty, the financial sector, that's what we're here to talk about. It's changed fundamentally since you started your work as a special advocate 14 years ago. A lot of talk about microcredits, microfinancing, and now a lot of the narrative is about financial inclusion. As we find ourselves on the halfway point to the 2030 SDG agenda, what's your take on the progress so far?
Yeah, like you said, I mean, it's been 14 years of work, and then we've only been, focused in financial inclusion. Before that was in 2005 with no microcredit, and it was very clear that, the last part of the low microcredit, we actually said to all the advisors that it's actually not about micro and credit. It's about actually having access to the financial services. We've actually made a big amount of progress. When I started this work in 2011, actually, was the first time we measured it. We were actually at 41%, and now we're actually 77%. So,
what are those percentages also?
From 41% in 2011 to 73%, and that's the numbers already sort of a couple of years old. So it's it's been growing quite a lot, and very big progress in terms of financial inclusion. But also financial inclusion is also becoming regulated. Because right now we're actually talking about people having access to a payment account, and still we have to see the depth of what type of services people actually have access to. It's not only being able to actually have a way, means to actually make payments, but do we actually have access to a saving account that actually help me, bridge consumption gaps or income gaps. And also, the space you actually get on a jurisdiction to actually be able to do that, right? So when we went and started doing the mobile banking, of course, there had to be regulatory space to do that, right? So, and how to open an account. At the very beginning, those people didn't have an ID. And what happens when you have an ID? And you have the KYC regulation. So, we started doing tiered KYC, so the small amounts of, the proportionality is also very important. So you are allowed to actually open an account without an ID. And the moment you start sort of growing up and, having sort of bigger amounts, you will have to have, because the business is bigger, you will have to have an ID. But then we actually started sort of talking about other issues that are very important, like the digital public infrastructure. Having a digital ID, so you can actually open an account from far away. We talk about still having a system that's interoperable, so where the bank can actually speak to mobile banking, can actually speak to a fintech, and a consumer can actually go from one operation to the other seamless, and so there's a competition. I think that in order to do what we need to do, we need to innovate, and I'm so sorry to say, but it doesn't matter which institution that will be doing that. I think we will need to partner as much as we can, and different institutions will actually be more able to innovate than others, and I think the space should be there. But of course, in a realm of actually having a system that's trustworthy and that is actually stable. Change from one operator to the other, right now is quite cumbersome. You should be able to take your data seamlessly from one operator to the other and actually have better access to services, because in the end of the day, we need to really innovate. Today, most of the clients actually do have, certainly in countries that are developing, they do have an account, but they do not really have access to really the services that will really improve their life. Look about our farmers. Do they really have access to some climate insurance? Do they really have access to a saving process they can actually sort of really make, for a particular end? Do they really have access to the right type of credit? Not only consumer credit, really practical credit. So there's a long way to go.
Sadly, still to say women are in that category. Those who are slightly less literate, I would like to say, are also part of that. And then this becomes a bit of a double-edged sword. So what do you think practitioners in the private sector should be thinking about to protect and safeguard these vulnerable groups?
No, absolutely. And we know from all the people that are financially included, and then mostly they are through technology, 1/3 of those people actually need some help to operate it. And from the one that I excluded, 2/3 say they will actually need some help in operation. So there is a very big effort that needs to be done on education, digital education, financial education, that's for sure. But also there is a big job to be done by the provider to actually simplify the products and actually make the default choice the right choice to be done. It was very interesting. I know that we're going to touch upon this issue a little bit later in terms of financial health. I was speaking to a big bank in America, and that they have at least 70 million clients in the United States. And they were, of course, they've been servicing these clients for a long time, but they realized that the lower income side of these clients were not really that well serviced. And when they looked at them, one of the things they actually came up to the conclusion was simplify. We're just offering too many complicated products that these clients cannot really understand or grasp the sort of more simple notions. And when they actually started doing that, the uptake of these services started sort of going up, and they started realizing that, with just very simple things, people started actually sort of increasing their savings and increasing the use of products and actually increasing their financial, buffers. At the same time, they also had some kind of physical presence. So not everything will be digital, and actually sort of teaming that up with some kind of physical presence is very important. In everything, I think that digital is a very good conduit, but not the only thing. If we're talking about sort of servicing women, but servicing farmers. I was visiting Senegal last year, and it's not only the digital sort of service, but as in teaming it up with suppliers of better seeds that are actually sort of, drought safe, being able to have better access to some fertilizers. So the bank teamed up with an input provider, together with some help of when you should be planting those seeds, what you'll be doing, in terms of rainy season. These clients, these women farmers, end up having a sort of threefold increase in yields. So it's not always just the digital side. So we have to be extremely creative in teaming up with other type of sort of private sector players, and sometimes with a grant to actually see how do we actually sort of, give more technical assistance. So again, financial education, digital education, having good sort of DPIs, also partnering up with the other players to actually bring these products that really make sense to the people that are really consuming it.
It's really a lot of what has been achieved in the inclusion space stands at risk of being eroded by, and that requires a significant mind shift in how we design products and making them more fit for purpose as well. So I feel like we should leave here thinking more of the resilience of really the most underserved person, I think. Do you agree?
Yeah, well, something that I've actually, it's a new notion, and there's also discussion about what that notion should be called about when you start something new, and for me it's very strong, it's called financial health. Some people call it financial well-being. For me that notion is, we've actually defined it as globally, as it is not only helps you to sort of take sort of care of your day-to-day finances, be able to build in the future, sort of being able to to invest in something for the future, even education of kids, etc. Being able to weather yourself against shocks, this issue of resilience. So it's just one aspect of it. Resilience is just one aspect of it. And fourth, because we've actually realized that it's a very important issue. It's a whole subjective part, not only the objective, the other three are objective, but the subjective part, do you have stress in managing your finances? We see that a lot of people, even in their better situation than other households, so some people actually have stress in managing their finances. So these four components, we just define them as financial health. We actually developing indicators for that. And that is something we're now starting to work not only with the public sector, sort of in terms of Minister of Finances, but also central banks, but also definitely with the private sector. And looking as, okay, do I give them a lot of services? I give them a lot of credit, like buy now, pay later. Is that making my customer better off? Or I'm actually pushing them into overspending and, over-indebtedness in something they would not be able to pay back, in the future. Are being done mostly by the last 40% or the part of their income is spent much more on fees and punitive fees and interest rates, and you get into spiral effect. So what should we do? Should we actually continue to do this? Because I know that if I'm going to continue to sell this product to them or charge this product to them, this person will never be able to stand up and be able to sell much long terms, like having a mortgage, having things that would really give them a sort of long-term perspective. So I know that is tough, because in the short term that means that overdraft fees, you're not going to be able to get it. I know of a bank in America that stopped doing it, and that's actually was $4 billion in income.
And what goes into making